Okay, now they also have a new second round of PPP loans, and it includes over $300 billion for first and second forgivable PPP loans. And unlike the prior loan program, this round will truly be limited to small businesses that incurred a loss in revenue. So eligibility is limited to businesses with 300 or fewer employees. And if you recall, in the prior round, it was 500 or fewer employees. And unlike the first time where you just had to sign a little note saying you needed the money, this time you'll have to have a sustained 25% revenue loss in any quarter in 2020 as compared to the same period in 2019. So you'll have to have a client will have to have a loss in revenue for one calendar quarter in 2020, at least 25%. The eligibility also includes small 501c6 organizations that are not lobbying organizations and have 150 employees or fewer. And this would include things like local chambers of commerce, economic development organizations, and tourism offices. They're also going to throw in certain 501c6 nonprofits and destination marketing organizations with 300 or fewer employees that do not receive more than 15% of the revenue from lobbying. And they're going to throw in local newspapers and TV and radio stations that were previously ineligible by their affiliation with other stations. Now, I don't think a lot of you that are watching this are going to be interested in any of these, but we have to give you all the information here. So, and what they did do is they changed the forgivable expenses and expanded the definition. So payroll costs, as usual, but this time including group insurance payments, including vision, dental, disability, and life insurance. And operational costs, property damage costs, supplier costs on existing contracts and purchase orders, including the cost of perishable goods at any time, investments in facility modifications and personal protective equipment needed to operate safely, and technologically operation expenditures. So, and of course, the other expenses will still be there as well, like the interest and rent. So, but let's take a look at what some of these new terms mean. So, a covered supplier cost means an expenditure, an entity to a supplier of goods for the supply of goods that are essential to the operation of the entity at any time in which the expenditure is made, and is made pursuant to a contract order or purchase order in effect at any time before the covered period or with respect to perishable goods. And then the term covered worker protection expenditures means operating or capital expenditure to facilitate the adaptation of business activities of an entity to comply with requirements established in the guidance issued by the federal, state, or local governments during a period beginning March 1st, 2020, and ending on the date on which the national emergency related to the COVID-19 declared by the president expires. This legislation includes a long list of examples that does and does not apply, and the list was too long to include in the webcast. So if you really want to see a list, you'll have to go to that section in it, section 304, B7, capital B. But I think most of you can understand, you go to the grocery store and you got the shields up, you go to the bank, they got the shields up. Restaurants have built little structures out in the street to have things. All those would count as the worker protection expenditures. So, and then the term covered operations expenditure means payment for any business software or cloud computing services that facilitates business operations, product or service delivery, the processing, payment, or tracking of payroll expenses, human resources, sales and business functions, or accounting or tracking of supplies, inventory, records, and expenses. And the term covered, obviously, this one was because of the riots we had earlier this year. The term covered property damage means costs related to property damage and vandalism or looting due to public disturbances that occurred during the 2020 that was not covered by insurance or by other compensation. So it was nice that they at least picked that up. But then again, 60% has to be used for labor, and only 40% can be used for these expenses. So, you know, how much can it cover? That's the big issue here. Now, what's the maximum loan size? Well, it's 2.5 times the average monthly payroll cost, same as before. The maximum loan this time is only $2 million compared to $10 million last time. The special loan considerations allow small businesses with the NAICS codes of 72, which is accommodation and food services, to receive PPP loan second draws up to 3.5 times their average monthly payroll costs. And that's supposedly to help these businesses combat onerous state and local restrictions where they're being shut down one day and allowed to open the next and spend the money and then shut down the next day. Maintains existing expansions and eligibility for businesses assigned to the industry code 72 as well. Loan forgiveness, full loan forgiveness is available if the borrower spends at least 60% of the second draw on payroll costs over either an 8-week or a 24-week period, which is selected by the borrower, and that's the same as it was in the prior one. They also have a simplified loan forgiveness. The loan forgiveness process is simplified for borrowers with PPP loans of $150,000 or less. This means, of course, we have another version of the SBA loan forgiveness application form, which will be forthcoming. If I recall, last time we had these PPP loans, they first came out, the SBA was putting out notices weekly, making changes. So we may go through the same little process again this time. Churches and religious organizations are eligible for loans and prevent future administrations from making them ineligible. And Planned Parenthood is ineligible for these loans. Okay, and they're also going to put some set-asides. They're going to put $41 billion set aside to ensure that the smaller borrowers and underserved communities get the help they need, such as small businesses with 10 or fewer employees, small community lenders, and independent live venue operators, including eligible independent movie theaters and museums affected by the COVID-19 stay-at-home orders. So all of this is in the Big Book of Taxes, Chapter 330. Or that's where it will be in about a week. Yeah, okay. And here we go, yippee. Everybody should be happy. The expenses are going to be deductible. And a little background here, the CARES Act didn't explicitly say expenses paid for with forgiven loans were tax deductible, although Congress indicated that was their intention. The IRS interpreted it quite differently. In fact, just 2 weeks ago, they came out with Revenue Ruling 2020-27, which says the expenses were not deductible if they were paid for with forgiven funds. However, in a rebuttal to the IRS, the Congress has made it crystal clear in the act that the taxpayers whose PPP loans were forgiven are allowed deductions for otherwise deductible expenses paid with the proceeds of the PPP loan, and that the tax basis and other attributes of the borrower's assets will not be reduced as a result of the loan forgiveness. So this is almost the same as if you didn't have the loan. So expenses and all your deductions are as normal. That also is in Chapter 330 of the Big Book of Taxes.